Good morning, good afternoon, good evening, everyone. I'm Taylor Watts from Watts Investing, and today we are doing our monthly challenge update where we put more money into the portfolio based on subscriber growth, how many videos we made during the month, and just give a general portfolio update and just a general market overview of what's been going on, what's been happening with our portfolio. So to get straight into it, since the last video we had 280 subscribers, now we've got 283, so we've gained 3, so we put $3 into Triple M, our subscriber stock growth challenge, and then we take a look at the dividend guesses for each month. So for this month, I guess we'd receive $20, Project Frugal came in with a guess of $22.19, and Patricia came in at $20.50. So both just above my guess, and we'll see how much it came out to be just after we put in that money into Triple M. So since this video itself is another video, we put $25 towards Triple M as well, and then the $3 from the subscribers as well, and that puts us that gets us putting a bit more in than we were in the past. We were just doing maybe $0 to $10 a month, but we want to put more into Triple M, especially when it's been on the decline recently from its kind of all-time highs of 210, well, not all-time, but its recent highs. It's dropping down to 140, so that's a 30% drop, just like that. So getting it down at a much cheaper price is great, especially when we've got those negative returns. Just trying to get that dividend yield higher as well, for it to compound over time. But aside from that, that is put in, and we'll go straight over to the portfolio to check out the dividends that we received for March. So we had multiple different dividend payers paying in March. We had Visa, our covered call ETF, our bond ETF, NZX, Johnson & Johnson, Microsoft, Triple M itself, Realty Income Corp, McDonald's, and Somerset. And that all accumulated to $20.39. If we scroll up all of these dividends we've had in the past, we can take a look at the graphs. So our dividends per month are looking pretty sweet, as if we include April, because we know that Hallenstein's dividend that's just been announced is coming, we know that it's going to be more than 20 next month, which is super cool. So we're going to have 4 months in a row where it's just kind of looking like a nice wee staircase, because it's going to be around $30 for April. It's probably going to be roughly what my guess is, and it's going to look sick just seeing that go up like that. Got our average dividends received going up and up and up and up. Got the total, of course, going up and up. Can't really go down. And then we've got the trailing 6 month going up and up and up and up. And we really want this to be a bit higher, because our goal is to get $333 by the end of the year. But currently we are roughly about halfway of where we should be at the moment. It's 25% of the way through the year, and we're at about 12.5% of our goal. So we're about halfway of where we should be. And then we've got our trailing 12 month, and if you ignore the last bar, that's just what we've currently got in April. It's going up and up and up and up. Again, super cool to see those numbers going up. But yeah, we would want to see this at like 27, so about 30%, 40% higher, to actually be on par. Because I think we need to average out like $27.75 roughly a month to get to our goal. So we're actually quite far below, but we're striving for it nevertheless. So we've got purple. We changed it from green to purple to stand out a bit more, and purple is my favorite color. So it's a bit better than green. We might save green for, like, I don't know, a few years down the line where it's just going to be massive, or we might not include green at all. But yeah, April of 2021 will actually be really hard to beat, because our dividend from Hallenstein's is going to be smaller than this one, I think, and smaller than the one in December, smaller than the one in December here as well, as it is 18 and then imputed and stuff. But 18 is the lowest they've done since August of 2020, so all of these last 3 were much higher by about 30%. So it is a bit of a decrease than what we were expecting, which is kind of sad, but it will still be around that $20 to $30 mark, which will be super cool, because it'll pump it up to 20. We've already received a little bit, and we expect a few dividends to come in, but I do not think we'll be able to pass 40, which will be a little sad, having a year down the track, we're not passing the month of the year before. but nevertheless, we will pretty much guaranteed be every other month apart from maybe December as well. We'll definitely be beating all of these. June will be a battle, but I think we can beat it. But May, super easy. July, August, super easy. And then these ones down here should be super easy. September, maybe another struggle as well. But as we're putting more and more money into the portfolio, these dividends should be getting a lot bigger. Yeah, so that is also Q1 over for the year in terms of dividends. So we achieved $41.75 our total for Q1. This is obviously bigger than Q1 the year before, Q1 the year before, and then Q1 the year before didn't even exist for us. We didn't even get the cent. We got 2 cents in April, the month after. But it is super cool to see quarter-on-quarter growth, or year-on-year growth, rather. So it's over double, super cool. And then the year before that, it was like 6 times. So if we keep the trend up like that, if we say get another 50% or double year growth, it'll be $80 for the first 3 months of the year. Yeah, I don't think we'll keep those growth numbers up like Tesla is, as we do not have the capital to put in or the output or anything. We're not earning enough to even fathom that idea, but it is super nice to have goals and to see where we're heading. That monthly I can't even speak. That covered call global ETF here is paying really nice dividends, really high yield, but yeah, it's paying super nice dividends. It started off small as we didn't put much in, kind of just figuring out what we're doing, but now it's paying big monthly, like $3.50 New Zealand each month, and we're just going to compound that over and over and over, and see where that takes us. It's been a pretty wild ride the past month and a bit, as the portfolio during the past year to October was just pretty standard, nothing really happening at all, and then it hits end of October and starts going up heaps, and it's like woo, and then it starts dropping a bit, we're like and then it raises heaps, woo, and then it goes down and we're like fuck. So we did hit like a really low point here, and then we hit another one recently. This month we were sitting at pretty poor gains, like 1,800 throughout the time we'd been. Investing was a pretty poor return, but now we've smashed it all the way back up to 4.5, 4. And it's mainly been Tesla being really volatile, but also a few other tech companies like Apple had this drop and then went back up. Triple M itself has just been going through the shitter. AT&T itself as well, having its own dramas, and I think Microsoft as well, doing something similar to Apple, hitting its kind of highs in the same period and then dropping. So we start buying some more and then it's going back up. And the market's been really going through it. Our bond fund obviously just been dropping as interest rates are rising, so that makes sense. And even though interest rates are rising, they're still not rising enough, like in terms of the fact that this is 2.24 and my bank account is still like under 0.5%. So like, even though other people are finding better ways to use their money, this drops 10%, makes this dividend 10% more, and 10% more on this dividend is more than my bank is currently paying, kind of thing. So it is just super nice for other people to be able to drop that opportunity to me in a way. Disney is still kind of in the same place where it's dropping, going, it's not actually that bad, dropping, it's not that bad, dropping, it's not that bad, and then maybe drop again. But I'm still dollar cost averaging down on this, because I think in the future, as they compound their intellectual property and their streaming service and really iron out the kinks and get into more markets and get heaps of that Marvel content coming in, I think they'll be making so much money off of that. Not only from that, but their theme parks and everything as well. As I don't know about other countries, haven't really been following them, but New Zealand is opening up a bit more, and that could either be for the better or the worse, but it does provide opportunity. And Tesla, of course, has just been doing its usual nutty thing where it just, I don't know, people kind of go, it shouldn't be worth this much, it's actually worth way down here, and then everyone else go, actually no, it should be up here, and then people go, no. So I just keep buying the na-na-nas, and then of course people realise something, or something gets released that can kind of be inferred, and it's like, oh shit, maybe it's up here. But yeah, it's been pretty funny to watch. It has been making our portfolio look a bit like a wave in a way, just up, down, up, down, up, down. It's been pretty funny. Then we've got our sleepers in our portfolio that don't really do too much interesting, like Procter & Gamble and Colgate, and they just kind of sit around earning us that nice dividend, that nice safe return. And that is generally just our portfolio and what it's been up to. The returns sitting around 27%, and yeah, so it's cool to see these different kind of returns that we've got. We've got our realised gains from sales of other things. So it's cool to know that the companies that we've sold out of because we no longer want to invest in them, because we don't think they're a great investment or anything, has actually been really positive on us. The unrealised currency gain or loss, I think that number is wrong, because I'm fairly sure... because I'm fairly sure lots of the US stocks we were buying, it was down here, which means it was taking less New Zealand dollars to buy them, and now it's gone up higher. So if we sold the US stock, we'd get more New Zealand dollar back. So I don't know how it's such a big loss on the currency, unless I'm just looking at it the wrong way around by accident. But I don't think that number's right. I think when I put it into Sharesies, they had my currency gains and losses at positive when I made my video, or at least I remembered something being positive. But yeah, the transaction fees actually coming in quite high as well. But our dividend's almost been 4 times bigger than that. So if the average transaction fee is 0.5%, then our portfolio, if it's roughly 4 times that, is 2%. So it's kind of a way to look at it. Yeah, but all these numbers, I don't know how Sharesies calculates them, but mine always turn out different due to decimals, rounding, taxes, the taxes getting returned into Sharesies and stuff, and just the little 1 cent you always have in your portfolio. Some of the stuff will just be slightly different. But yeah, Hatch, our Tesla, our 2.2 shares that we've just been holding, have been bouncing around following the stock price exactly, because it is only Tesla in this portfolio. But yeah, just super nice return of 240%. So if we did sell this would be our best investment yet, be better than that Earth 2 investment by far. But since it is still in the play in the market, it's not our best investment yet, because it could all go to shit. But we'll be holding. And yeah, so these are our graphs. They're looking sweet. $20. Obviously, Trish bet us on the guess. I think when I was going to share that earlier, I just got distracted and started talking. But yeah, $20.39. My guess was 20. Her guess was $20.50. So she was closer than me. She was 11 cents off. I was 39 cents off. So skimping around close to my guess is definitely the way to go. She bet me this month. I won last month, and Project Frugal aiming in nice and high for us, giving us that optimism that we want. I wish it was that high, or at least higher than it was, because that just means more free money. And for this month coming in, we've got that Hallenstein's dividend. I don't know roughly what it will be. I've kind of had a guess. And then we've got that dividend that's already come in, and we've got a few other dividend payers. So I'm going to guess kind of like a 32 for April. And I think that'll be roughly where it's sitting. If the Hallenstein's one is lower than I expect, then this will be way off. And if the Hallenstein's one's right where I expect, it'll be pretty bang on. And then if it's higher, then obviously higher. We would hope to beat this 40, but I do not think it's going to happen. It will just be nice to see those 4 purple lines get bigger, and then shoot off, drop down to May. And it's roughly what's been happening. Our weightings, we haven't updated the actual kind of number of shares, but we haven't actually invested much in the past 2 to 3 weeks, as we took some time off work as we were unwell. So to be able to pay the bills while not working was a wee bit of a hit in the bank, so we couldn't invest those weeks, as we just had to pay the rent, pay the food, stuff like that. But Tesla taking up that massive market value in our portfolio, 42.6%. I'm sure if we updated our number of shares, it would probably be even higher because we probably would have bought some Tesla in the past 3 weeks. But yeah, it's really standing out there. And then we've got our Apple, actually almost double Hallenstein's in market value, even though I don't think we've put in double the amount of money. It's just the return is better, maybe. I'm not actually too sure on that. Maybe we have just been sleeping and just investing in Apple a lot more than we remember. But yeah, we are getting the shares up there. And yeah, then we've got our kind of safe tracker, our S&P 500, of course, our We Bank play, and then we've got some New Zealand company here. Sorry, that's not Mainfreight. That is Microsoft. Mainfreight is back down here. So we've got those American dividend growth companies coming up here as well. Got our monthly stocks here, sitting around the same place. And then we've got Mainfreight, got some more American dividend payers, and we've got the rest of our kind of New Zealand things down here. We don't actually have that much in New Zealand anymore. It's mainly just Hallenstein's, Westpac, and Mainfreight, and then the rest are kind of just so small. But they're good dividend payers. Like NZX paid $5 in its last payment. It does like twice a year, so that's $10. So that's not a bad yield on that little market value, because I think it's already at a gain as well, possibly. Maybe not. But it is super cool. Again, Somerset paid a dividend as well, quite a small one. Fisher & Paykel pays dividends, and we haven't touched them. We don't touch them much, but they're only $200-300, and they're paying like multiple dollars each quarter or every 6 months, and it's kind of cool to just leave them to do that. It's just like this. We haven't updated this in a week or two, but it's just every dividend we get paid by those companies goes up and up and up and up, up and up and up and up. And then sometimes down, of course, because they don't have the same profit that they're seeing. Hallenstein's again will be another drop, but NZX going up and up and up and up. And between these two dividends, it's a huge jump because their share price dropped heaps in here, so we bought heaps more because it was high yield, and we went, yeah, let's smash it. So it's going to be getting bigger and bigger. Again, Somerset coming in, growing. Yeah, it's lovely to see all these dividends just climbing and climbing, even with the companies that we sometimes don't touch that much, like Coca-Cola, Pepsi, McDonald's. We haven't invested too much into them too frequently, but they're just climbing. Little dividend raises here and there. Yeah, not much of it will be compounding because we're playing with very small numbers, but you know, every year that 3% yield, you get another 3% on that 3%. It's not big, but it is something. And when it adds up over 40 years and the dividend raises come in on top of that, it really does start getting to those big numbers. It's like with Apple and Visa and stuff, they're doing like 10 to 15% dividend growth year over year kind of thing. So, you know, that 3%, 10% growth on that becomes a 3.3. So, you know, you get 3.3 on that 3.3, and then if they do it again, you get 3.63 or whatever, 6.6, and it just gets bigger and bigger, and that's just within a few years. And yeah, so that monthly one again getting big and big. It's just nice, numbers going up. It's good, simple stuff. And yeah, another thing is we've got our net worth tracker. It's kind of a scuffed version at the moment. It's not very tidy, but kind of the purpose is just to see what I've been up to over the past few years, see what I've been spending my money on, what's been taking the big hits in the net worth, what's been retracting it back, and kind of being able to track kind of what I'm up to with my money. And it'll be interesting because, you know, like in the next 5-10 years, whenever I plan on getting into property and living in my own house, it'll be interesting to see kind of how I get there, how fast I get there, and then how I get back out on the other side. So kind of the general thing of this is, I think here I have a car, so that is the main debt here. Parents gave me the money, and then there's some other stuff like, I don't know, just like a thing I've got listed here, like laptop, certain things, going snowboarding, student loan starts, uni fees, and then here I get a lot back because I sold my car. Then here it's just like getting some back. Then around here, start taking out some more money, maybe investing less because it's, I don't know, end of the year, summer, partying or whatever. Then January, and then the next university year starts, and this one's not fees free, so boom, there's 7k. And then yeah, we're just, getting it back. And then between August and September, that would be like a COVID subsidy thing, I think. And and then of course during November, December last year was when we were moving out, paying that bond, trying to sell some things and get out of the house, not have a job for a bit, be on the dole while we were moving. And then we hit our kind of recent peak, and then we've just been working it off. So we've, of course, some of it is the stock market being a bit silly, so some of this massive gain here is the stock market dropping, or mainly Tesla when I say that. And then here, some of that is Tesla regaining its share price, but also just paying off, because our general thing we are tracking is our debt. So it had a peak, I think, here, and then we've just been dropping it. So yeah, since the start of the year, we had 43,200. And now we're at 42,300, so we've dropped at $900. And KiwiSaver's been going up as well, so that's just that 3% out of our wage. And the student loan is like 10 or 12% out of our wage. And we're just essentially paying back money that, like, some of it we got paid like $240 a week to live, and some of that we put on the stock market and whatnot, and we're just paying some of that back. And then we just got our general cash and stuff. So that is where we are at. All those numbers going up and down, and that's the general gist of what's been happening over the month. And happy investing, guys, and I'll see you in the next video. Keep it easy.